Good morning, everybody. It is February 7th, Friday, NFP day, and we are going to start our prep for the ES. But before we get started, did you take the short yesterday that we laid out on the insurance buying, or did you catch the long back up to trade with the insurance providers in the commercial side of the market? Or are you still unsure what's causing these moves, when they're going to happen, and still lost in the market? We'll dive into that today, review yesterday, and get prepared for this morning. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So when we dive into yesterday, we had laid out that, and we've done this time and time again, that traders wait until the last minute to buy insurance. They wait until the storm is almost upon them, and everybody does the same thing at the same time. And so the whole day we spent sideways. We mentioned being in risk compression mode yesterday for our market makers, which is where they want to be. It is much more profitable for them in compression mode than in absorption mode. And we saw a very tight range as expected. And then in the afternoon, when everybody starts to buy the insurance, we see the down move and then right back up. And then on Amazon earnings, we had the exact same pattern play out again. And I hope you all were prepared and capitalized on this. The insurance providers made their daily bread on this move, and our educators did as well. We laid out in our room that at 1:30 that this is everything that was expected, and we're looking for the down move. We're looking for the down move and then the move back up, and that's exactly what happened an hour later, and our educators get long right here at our 60-70 level and held the position, part of the position overnight. That's how we want to be trading. We want to be trading with these markets, with these flows, and understanding what's happening. So if we dive into today and where we are inside of yesterday's range and value right now, very small because it's a big catalyst day, NFP in an hour. But what we can look at here is we are over all of our lines in the sand. So we look at a few of them, more important than others, but we are over them. And that tells us, again, risk compression mode, which is where the commercial side wants to be. So we're holding the market up overnight. From our systematic side, as long as we stay over 60.32 or under 61.80, we have a buyer in the market around $3 billion. And again, this is the same strategy that last week lost 10 to 15 billion in the buying on the way up and the selling on the way down. And they're doing it again this week. We're seeing the same thing from fund managers, and we'll dive into that on our weekend video. But from the commercial side as well, if we start to get up to 61, 65, or 83, right where our systematics turn into sellers, we get to where our commercial side of the market will start unloading supply into the market. And if we happen to break 60.32 on NFP, we have our last bid in the market to help hold us up there. And if we break that and bring in that 3 billion in selling, then we're looking to come down to our lower areas where our commercial side of the market will have a lot of cash to deploy and we'll start looking to buy. So this gives us a framework to view the market. We have levels and plans inside of there that we look at trading. Some of the big ones you can look for outside of the short video we did, where we gave you the levels for today. We can watch this 61.22 to 28 level. This is the edge of the highest buying and also our largest position that we have. At first, we'll look for resistance, and then if we get over that, we'll look for that to turn into big support and push us to that 61.65. People are moderately insured ahead of the data today, not overinsured as we've seen in the past. And we are heading into another Friday where we've seen the market get a little antsy in the afternoons. So those are some things we want to pay attention to. We have our key areas, our key turning points to watch and see where the market is behaving. But again, as long as we're over our line in the sand, the easier path is to the upside until we get to this 23 area or up into the 60 area where we actually bring in a large amount of supply into the market. And we flip all of that demand and that systematic buying into systematic selling, and we get that supply coming from our commercial side. So that gives you a framework today. Be sure to control your risk as there is key data today, and there's also consumer sentiment at 10. So pay attention to both of those and have a great weekend, everybody, and enjoy the Super Bowl.